Hello and welcome to Cash Chats, the podcast from Be Clever With Your Cash that helps you make the most of your money. I'm Amelia Murray. Andy's away, so today we're welcoming back a very special guest who you might remember from a few months ago, the man with the two first names, Martyn James. Martyn is an award-winning consumer rights expert, TV star, podcast host, journalist and broadcaster, and what Martyn doesn't know about money isn't worth knowing. And with no further ado, welcome back, Martyn.
Why, thank you, Amelia. I'm loving that so much. I'm going to make it my ringtone. A ringtone's still a thing. I don't know. I feel very old all of a sudden. I'm going to keep that forever.
Oh, you must. So today it's UK Savings Week. So for this episode, we will be talking about secret savings and whether they're a good thing, hikes to the price of first class stamps, and the bank of mum and dad calling in lawyers to claw back gifts. Plus, I'll also bring you our deals of the week, which include a new £175 switching deal, the return of Tembo's lifetime ISA welcome offer, and free cake at M&S for new parents. All that and so much more. This is episode 417 of Cash Chats. So, Martyn, happy UK Savings Week.
Well, happy savings. Don't they come round so quickly?
We really do. And as part of this week, we've had some new research from the Building Society Association, which has suggested that almost half of parents have or have had in the past a secret savings account. Now, if we look at the details, it's almost half of parents compared to 1 in 5 non-parents who are making this admission. Now, I thought this was interesting with the difference, especially as when people have children, their lives kind of become more combined, both financially and otherwise. But yeah, just interested to know what you thought.
So let me tell you, I can't wait to hear what the viewers think of this particular one, because I thought this was a really sensible, pragmatic thing. Things can go wrong in life. You might have a partner who you love to bits, but who isn't necessarily good with the money. So I thought it was a sensible, pragmatic thing to have a secret savings account. But oh no, people have very strong opinions about this one. Some people consider this an act of like divorce worthy material. Some people are outraged by all of this. I've had people messaging me asking me if they're entitled to some of this hidden money in the event of a divorce. It is a relationship killer. So I would just say, not that we encourage dishonesty on this show, but I would just remind people that if you do have your actual home address on your secret secret bank accounts or secret investments, remember that sometimes banks do make mistakes and will post out letters. So just be cautious if you don't want your other half to find out. But this is a contentious issue.
It really is. And I'm similar. I was on the radio talking about this on Tuesday morning on some local radio stations. And I put my hands into the ring. I don't think it's necessarily a bad thing. And I think there are lots of reasons why people would consider keeping their money separate but also secret. I was actually having a chat with the women in my team today about it. And I think, especially given from this research that women are more likely than men to have less than £100 in savings, we also know that economically, women are at a disadvantage. So we know that they're more likely to be in part-time work. We know that they're more likely to be earning lower rates. We know that they are more likely to take career breaks to look after children or other family members. So in terms of, the saving potential and the earnings potential, they are at a disadvantage. And so I'm kind of, to my women out there, I think it is really important, as my granny always told me, to have a running away fund. And that doesn't necessarily have to be as negative as it comes across, but it means that you are not financially tied to anything. If you want to leave your job, you have the money set aside to do so. If you need to leave a relationship, you're not stuck in it because you're financially dependent. So, hey, I'm into the secret savings as well.
Oh, absolutely. I mean, I wouldn't call it runaway fund. Once again, just always think through what would happen if you get caught. But it is one of those things that actually, as you rightly say, women are disproportionately affected by things like this. And it's, I do a lot of work with women who are leaving terrible partners and, starting again. So it is vitally important. But it's not just for, be that worst case scenario. The fact of the matter is, both men and women can be wonderful partners in all other areas, but are just really rubbish when it comes to finances. And once again, I've seen some horror stories of men and sometimes women who faked loan applications. And remember, if you've got joint finances, then you're liable as well if the other partner vanishes or runs off or does something along those lines. So it's a very sensible idea as well. I mean, one of the things I loved about this research was the fact that I think 30% of women were suggesting that they were keeping this money to one side as a surprise, which is a great excuse. And I don't believe that for a single solitary minute. Surprise! I've been hiding money from you. Yay, let's go on holiday. But that is possibly a reason you might want to give, just in case your bank does make an error and they hand over this information. But yeah, having a contingency plan is very, very sensible in this day and age. It doesn't mean that you don't love your partner or you don't love your kids. It just means you're thinking about what happens in an emergency, and an emergency fund is always the right idea. Maybe that's what the name that you should put on the account.
In it, indeed. And when we're looking at our savings, I've also seen some other research this week which suggested that 3 in 10 people are keeping their savings in a current account, which means they're probably missing out on quite a chunk of interest. And furthermore, we've got £250 billion sat in accounts earning 0%. So there's definitely a better place for your money. But if you are looking for a new savings account, there are some hidden catches to be aware of, aren't there?
Yeah, absolutely. I mean, the one of the frustrating things about life is there's always a caveat. Nothing is ever as straightforward as here's this wonderful interest rate. So there are temptations to lure you in. There's some top line rates that might look good on the accounts, but aren't as good as they seem. But there are also restrictions. And actually, one of the things that you should be looking for if you do want to consider moving your money to a good savings account is to kind of ask yourself about when you need that money. So, for example, if you've managed to save £20,000, and if you have, well done, because you're doing a lot better than many people in the UK, then you might want to say put 10,000 of that money into a notice account where you lock in a really good rate of interest, maybe for a year up to 5 years. Now that means you can't access that money for that whole period, but you will be guaranteed to get that rate. But then on the other hand, you also might want to keep the other £10,000 in a high interest account where that money moves up and down. So if there is an emergency, and in life there will always be emergencies, then you are able to access that money. So there are a number of things that you do need to think of.
And there's also, I think when we look at, the headline rate, there's also kind of underneath in the small print, there's like limits on what you can withdraw and when. There's the rates that change. So you might be offered the introductory, bonus rate, and then that drops after the 12 months are over, for example. Another thing is the compound interest. So you can choose to have the interest paid into another account. And in that case, you won't get the benefits of compounding, which is your interest earning interest. And something that maybe isn't always obvious is what happens when the account matures. Where's it going to go? What is the rate going to be? So there's all of those things which we try and consider in our savings tables, which we update twice a day. So when we know that a rate is going to drop, as soon as we get the date, we include it, which you can find all on our website.
I must say as well, by the way, in the articles I write for a couple of national newspapers, I do rely on those tables quite a bit. So by all means, do take a look at them because they are really, really good comparison, and it's a good way to keep an eye on the best deals that are available. And also, as well, if people are a bit worried about new companies they've not heard of, just check on the site to see if they're covered by the Financial Services Compensation Scheme, and that guarantees your savings up to 85,000 pounds if something goes wrong. So don't be put off by a new company, but do check they're regulated in the UK.
Well, I'm so glad you've mentioned that because I've actually done an article this week
Well,
on, and
hello.
yeah, can you trust small savings providers? And that is all the questions that you should ask yourself if you're considering some of these small providers, which you often see in the Best Buy tables, but might never have heard of. So, yeah, it's all on the website.
How do you feel about plagiarism, Amelia? Do you mind if I borrow some of that?
Somewhat sorry.
If I just lift one or two bits from my next columns.
Oh my God, please do. I'd be honoured. Um, Now, moving on from savings, there's been some news about the state pension this week. So, what's going on there?
That's right, Amelia. It's been a bit of a difficult time, torrid time for pensioners at the moment. Because on one hand, many of them will be losing their £250 winter fuel allowance, the payment that's given to pensioners to get them through the expensive times of energy in the winter. But on the other hand, they're going to be getting an increase under the triple lock pension scheme, which I'm hoping you're going to explain, Amelia. Otherwise, I'm going to have to grit my teeth and give it a go. Um, and this basically means that pensioners will be getting an extra £460 a year from next April. So, good news and bad news for pensioners.
Exactly. So, triple lock. This is where the state pension goes up each year, either by 2.5% inflation or average earnings growth, whatever is the highest figure. And so, in this case, it was earnings that was the top figure. And that's where this £460 has come from. I think last year it went up by £900. So, there's quite a difference there. And, the analysis around this is not just around what it means in real time. So when people have taking out the winter payment allowance and putting a dent into that increase, but also what it actually represents in terms of inflation. So it needs to rise by at least £250 to keep up with inflation. So really only 210 is representing an actual increase. And then if you look at the winter fuel payment, those who are losing that are going to be sort of worse off anyway. So yeah, it's a difficult time. I think Keir Starmer is under a lot of pressure to unveil what other support measures he's going to introduce to help some of the poorest pensioners. And in the meantime, if you are on a low income and are state pension age or know someone who is, and you're not claiming pension credit, so this is a benefit that tops up your income and gives you access to other benefits, including the winter fuel payment, discount on your council tax, a free TV license. Do look into it because there's around 800,000 eligible people who aren't claiming it. So it's worth having a conversation in your household or with your relatives to see if you're due it. So with the state pension going up, brings me on to our next story about first class stamps.
So yes, just on top of everything else, first class stamps are going up to a whopping £1.65 per stamp. And so this is obviously causing quite a bit of ructions. And of course, people want to find out more about the price rises. It's all on the Be Clever with Your Cash website. It's all the information you need to know that's on there. But it's also worthwhile bearing in mind about when this is happening. So this time of year is traditionally when these price hikes are announced. But is Royal Mail trying to destroy Christmas? That's the question that I keep getting asked because you might have stared at your letterbox feeling a little bit lonely over the last few years as the number of birthday cards and number of Christmas cards kind of reduced. And there's a real feeling out there as well, actually, that one of the few pleasures in life, receiving a card, receiving a personal letter from somebody that you know and love, is simply going to be wiped out by things like this. Now, of course, there is a monopoly here. So the fact that these prices can rise, there's very little we can do about it. But ultimately, this it feels very much like the Royal Mail are doing their level best to actually reduce all this kind of type of correspondence because it's not where they make their profits. And that's a really sad thing because I love receiving a card.
Me too. Oh my God. Royal Mail is like the Grinch.
You've
I,
ruined Christmas.
no, I love getting post as well, and I also love sending post. So at Christmas, I get all my Christmas cards, and I really enjoy sort of being sat there and writing my Christmas cards out, and going to the ritual of putting the stamp on and going to the post box. And I remember even before this, so it's a 22% increase from the 7th of October, which is madness. But even before that, looking at the cost of first class stamps, and I was just like, oh my God, if I send, you know, even 10 Christmas cards or 15 Christmas cards, it's loads. And I think I was talking to someone a while ago about wedding invitations, and they were getting really excited about, putting the wedding invitations in the post. And they were like, actually, I'm just going to email because this is crazy. So yeah, it is a bit disappointing. What you could do, I mean, what I do is I absolutely reject first class stamps. I never use them. I'm ready, I'm ready to kind of like take the punt on the 3-day wait versus like the next day delivery. So I just try and get a bit organized and send birthday cards extra early, but I will only ever buy second class stamps. But if you prefer the first class, you could stock up now. So if you send a lot of letters anyway, you could buy in bulk. Or you could do what I do and opt for second class, which isn't going up for now. This is just an opportunity for a reminder with the non-barcoded stamps. So they expired July last year. And if you've still got some lying around, you can't use them, but you can swap them for barcoded ones. But you will need a form from the post office, or you can find the form online. There's more details of that on the website as well.
Yes, and do read that because it's the Royal Mail have introduced a very complex process for actually swapping those stamps over. You can do it, but as you say, you have to follow this very specific process. So do check out the guide on that. And also, as well, I think it was mentioned on the site earlier in the year. There are a lot of issues to do with fraud and fake stamps as well. So beware of finding bargains on big online shops, because they may not prove to be the bargains that we think they are. We've still not really got to the bottom of where all these fake first and indeed second class stamps came from. But bear in mind, they are almost never discounted. So if you see a reduced price stamp, chances are it's probably fake.
Yeah, stay away from eBay and stick to WH Smith, your post office, and your
It's
yeah.
you. I love what you did there. Still, you'll be worth every penny.
um, the next story involves the Bank of Mum and Dad. Now, I really, really liked this story. I found it so interesting. This was something in the Telegraph. And basically, what's happened is there's been an increase in parents who've given their children money to buy a property with the partner or the spouse. And there's been this increase in them contacting lawyers to get the money back when the relationship between the child and the partner breaks down. Little bit complicated, a bit of a tangled web, which is also what they're finding when it comes to getting their money back. So the money kind of gets absorbed into everything else that's going on and can be really difficult to get back for the parents, even if it's declared as a loan. So it all sounds really tricky.
Yes. Oh, money and families. It is the most complicated thing here. We have to go into some slightly dark territory here, so I do apologise in advance. But I think a number of the younger people who were interviewed about this were working on the basis that the older people might die off, or not be fully aware of everything at the point where they actually had to repay the money. And others seem to have been working on the basis that they wouldn't have to repay any money until they hit a certain amount of earnings. So what's really frustrating about this, and you could argue when you take all of this complexity away, that a lot of the overheated housing market, which has led to these massive prices, is because middle class and upper middle class parents have been handing over big chunks of cash to get their kids on the housing ladder. But of course, when things go wrong, as Judge Judy or indeed Judge Rinder is often keen to say, if you do not have a written contract, you do not have agreement, certainly not in a court of law. And this is where these things can become very complex. Now, if you are one of those parents or indeed kids who signed up to one of these things, then and there is a contract in place, then if it has to end up in court, it's going to be an absolute nightmare. It will also be very expensive to sort things like this out.
Yeah, so what the article was saying was, the guidance is to have the proper documentation stating it was a loan. So that could be, a written agreement, that could be emails between you, evidence of repayments, or it will be considered a gift in court and then won't be ordered to be repaid. But even if it is declared as a loan and there is still the evidence there, the court might still decide that the ex spouse, who's not the relative, should still keep the money because divorce, there's so many different things going on and there's so many factors that they include, including, the income of both of the people, the length of the marriage, health is a consideration. So even with the documentation protecting yourself, there is kind of no guarantee that the money will be repaid back. And the lawyer in that article was quoted saying that she's expecting a wave of these types of disputes in the coming years as couples split up.
Yeah, I think that's perhaps inevitable. And also, as well, bear in mind a lot of this is done as a way of getting around inheritance tax and hiding money. So, HMRC are very good at spotting when big chunks of money suddenly arrive back in bank accounts as well, particularly if it comes from a court case. So the whole thing could be incredibly messy. And it is just once again a reminder to everybody that if they are thinking about getting into an agreement about this, you have to set terms like, what point the repayments start. Is it when people hit a certain amount of money? And also, in the eventuality that people divorce, what happens then? Who are you lending the money to? Is the key thing here as well. That all of the law surrounding, when people get married and what happens to money and to money that's lended is ludicrously complicated. So the only people who win are the lawyers ultimately. So lots of things to think about if you are planning to help your kids get on the housing ladder, or indeed if you are taking a loan from the bank of mum and dad, because it might just ruin Christmas once again. We're saying ruin Christmas a lot here at the moment, aren't we? Sorry, everyone. I don't mean to be a downer.
Right, we're still on the property topic, but this time looking at renting. This week, Labour outlined some rent reforms. So they're designed to protect renters, but what more is there to it, Martin?
Well, this is something that's been backwards and forwards for quite some time. And, regular viewers of this will know that there have been all kinds of proposals designed to protect renters. Now, the Conservative government, the previous administration, they were lobbied very successfully by landlords, some of whom were Conservative ministers, Kelsey Priest, um, to basically water down and reduce the proposals. So, as a consequence, we had an exceptionally watered down bit of legislation that passed Parliament earlier this year. Now, Labour said that they were going to reintroduce these policies to ban no fault evictions. That's when you are kicked out mid contract because the landlords decided that they wanted to. So they would still be allowed to cancel your tenancy at the point where it ends with the suitable amount of notice, but they can't do this mid-term. They can't just do it without giving you a specific reason. And of course, they have to give you a certain amount of notice when that happens as well. Now, also, there are lots of proposals about changing the reasons anyway when people can kick you out. So, for example, if you're a long term tenant, it might have an impact on whether you can stay unless the landlord is opting to move back into the property or to resell it. So, lots of things are being proposed here. And this is necessary because, as we've seen, rents, particularly in the cities, are out of control at the moment and moving way beyond the realms of feasibility. So we live in a really ridiculous world where it's actually much more expensive to rent than it is to get a mortgage. But you won't qualify for a mortgage, yet you'll qualify to pay a third or half more in rent. And that doesn't make any financial sense. So hopefully this will go some way towards redressing the balance. Though, of course, lots of people are saying that as a consequence, many landlords will pull out of the market.
I think a good thing as well in as part of this reform was around the raising of the rents. So under these new rules, landlords will only be allowed to raise rents once a year and to the market rate. And I remember following the mini budget. I mean, renters have had a hard time for a while now. And after the mini budget, how it affected kind of property en masse. And I had friends who were, their landlords were raising rent and they were trying to find another place, but all of the costs were completely escalating, and it was a really really like stressful time for lots of people I knew. um, there's also new rules around the bidding war stuff. So again, I remember reporting this years ago where lots of people would be trying to compete for the same rental property, and it would just be like, okay, well, what are you offering? And it would end up being hundreds of pounds, if not more, above the asking price. And so under these new rules, landlords and letting agents will have to publish an asking rent for the property, and they will be prevented from asking for or encouraging or accepting any bids above this price, which I think is a really good idea.
Yes, absolutely. And as is always the case, with laws like this, the devil is in the detail because this will be a good thing. But then, of course, it's proving it. It's who's going to police it? How is this going to be monitored? And what's going to be going on? So, for example, we already have rules, quite strict ones, about deposits, where deposits have to be kept in a specific account where they can't be accessed by either party and where rules must be followed when it comes to the release of that money. Now, already there are lots of disputes that already go on about that. So again, they're not landlords aren't allowed to ask over a specific number of weeks for the amount of payments they require in advance as a deposit. But we know that some at the moment will stick to that and then ask for an extra 6 weeks on top, off the record. So it all comes down to proving it and holding these landlords to account. And actually, we see very, very few prosecutions of landlords, and it tends to be these big group landlords who actually have a number of properties, not individual landlords who are the problem. So hopefully, it will drive some of the worst elements out of the market and help hold them more accountable, particularly for things as well like maintenance and black mold, which of course has been in the news quite a bit. And if you've ever tried to get black mold off your bathroom, or then you'll know what a miserable experience it is. So hopefully, we'll see some changes for the better.
I thought you were going to bring up Christmas then and black mold. It's ruining Christmas.
This black mold coming on here, ruining Christmas, getting on your tinsel. I know, terrible. It's a nightmare.
So our last story is about ASOS. And if you remember a few weeks ago, Andy and I were discussing this after Andy got an email from ASOS regarding changes to its fair use policy regarding returns. And then he spotted a thread on Mumsnet. I think he was actually reading Mumsnet first, but whatever. So we seem to be the first publication to mention this, although there wasn't that much information. But it seemed to suggest it would be cracking down on returns, or at least customers who were returning a lot of items. And now it has. So this week it's been in the news that it is introducing a £3.95 returns fee for people it's identified as frequent returners who keep less than £40 of their order. And this is another thing that is causing a lot of outrage, isn't it?
Well, absolutely. And if you get that creaking sound, is the sound of me dragging my soapbox over because I feel very, very strongly about this issue. First of all, congratulations on breaking the news on that one, because this is a big deal. Now we've seen a number of other online only retailers attempt to introduce these charges, and then they've been forced to backtrack after a bit of outrage. Now ASOS is so big that it's one of those ones I don't think they'll necessarily back down because they've given themselves some wiggle room by using that phrase frequent returners. They can argue that they're not applying this charge to everybody, but what is a frequent returner? My issue with all of this is these businesses have basically killed the high street by offering mass-produced cheap goods without the overheads of the high street retailers and left us in this situation. And as soon as they've taken over markets, they're changing the rules. Now, the fact of the matter is, if I walk into a shop on the high street, I can try something on, reducing my need to actually return it. Whereas with online retailers, you have to because it's impossible to get an item that's the same size. So you may need to order three of one thing in order just to find a variable that you can wear. And that's before you decide whether you like it. That's their business model. And I think that should be their problem. But if they're starting to then hold you accountable because you've kept one item but returned another two, then that's deeply unfair. That basically means that not only have they left a lot of the high streets in the UK a wilderness, but they're also holding us accountable for their own business model with their very low overheads. So I would like to see the whole industry shaken up. Um, Companies like this, and indeed all the main online retailers, do not have customer service telephone numbers, which is an outrage. So I think they should be made to have customer service telephone numbers. I would like to see an ombudsman for all retailers so people can go and get some justice if things go wrong, because shops are by far the most complained about of all of the sectors in the UK. I'd like to see a regulator cracking down on all of them, and these charges need to be banned for only the most prolific and extreme returners. There you go.
I want to clap, but Steve, our producer, always tells me off for clapping. So, yeah, not in the podcast. I'm lightly tapping my hands. Thank you for that. I mean, you're right. We've Andy and I have chatted about this before on the podcast. It's this like horrific situation where you've got inconsistent sizing, which means that people have to order more in different sizes, combined with the fact that you can't try things on. And someone pointed this out on social media where they were like, "You're taking a risk with online shopping. That the reassurance and the reason you do it is so you can return things for free." And I love this, and I bring it up probably every time we talk about this issue. My granny, who is not an online shopper at all, she's anti it, and she's just like, it's like buying a pig in a bag. You don't know what you're getting, you can't see it, you're taking a risk, and then then there's no recourse. So yeah, it does feel unfair. And as you said, there have been retailers. H&M did a U-turn when they introduced a returns fee. So yeah, I don't know what's going to happen with ASOS, but yeah, people are saying that they're not going to use it anymore because of this fee. So we will see if the people have the power.
I think we have to start voting with our feet, and I think that is the only way to kind of prove that that we to force these businesses to actually pay attention. But hopefully, you never know. I mean, I can see a future where the whole high street has been reimagined. We've got all these empty department stores. It wouldn't be too hard for all of these online businesses to be forced to have return stations, so you can physically go in and leave things, and then there's a sale rack of
Mm.
goods that haven't been wanted. And it would actually revitalize all of these things. You could have a glass of prosecco, have a chat with your mates while you're going on, and we could actually inadvertently revitalize the high street by making these businesses club together to have places where we can return things without the cost. So there is a solution, and there's always a solution for situations like this. Just needs to be a little bit more creative.
Right, let's get Keir Starmer on the phone. Hello, we've got an idea to revive the high street. Oh, well, brilliant. Well, that's all of our stories for this week. And thank you so much, Martyn, for joining us again. Where can people find you?
So my name's Martyn with a Y. My surname's James, and you can find all of my newspaper columns on my website and advice for free. Obviously, it's not comparable to this one, it goes without saying, but all of the info's on there, and I'm always happy to get new ideas for things to write about. So tell us your stories.
So before we finish the episode, let's go through the deals of this week. We've got a new bank switch deal from First Direct with its first current account. Now, this pays £175, which is the highest it's ever offered. Plus, you can get £35 if you apply via Top Cashback. Now, this is only for new customers, and you can't get the account if you've had an HSBC current account on or since the 1st of January 2018. So it's really cracking down on the number of people who can get this bonus. You'll need to use the current account switch service as usual, pay in £1,000 and use your debit card 5 times in the first 45 days, move over 2 direct debits or standing orders, and log into online banking to get the incentive. We don't know when it's ending yet, but we will update the article when we do. So we've got another current account deal, this time from Santander. So the bank is offering to cover the £3 monthly fee for the Santander Edge account for the first year. So that's £36 paid into the account if you apply before the 7th of October and pay in £500 in the first 30 days. You'll then get the money within 60 days. Now, with this deal, there's no need to switch the account, and there's also nothing in the terms and conditions that says you have to keep the account either. So I'm just going to leave that hanging. On lifetime ISAs now, Tembo has brought back its LISA transfer bonus. So it will pay up to £300 depending on how much money is in your LISA that you transfer. You'll get the full £300 if you transfer at least £50,000, the equivalent to 4.9%. You'll also earn 4.3% with Tembo, as well as the 25% government top up. So to get the bonus, you'll need to make the transfer by the 30th of September, and then you'll get the money 6 months later. Next deal, if you're looking for something to do in London this month, Open House is open this weekend. So Open House is offering free or discounted access to hundreds of buildings and gardens in London, many of which are normally closed to the public. Now, this goes on from the 14th to the 22nd of September, and all the details are on our website. And finally, if you're expecting a baby or have had one recently, sign up to the M&S Baby Club and get free cake, a pastry, or fruit pot when you buy a hot drink on Tuesdays between 9:30 and 11:30 a.m. And that's it for this week. Thank you so much for joining us. If you want to read the articles we've spoken about today, you can find them at becleverwithyourcash.com or in the show notes. We'll be back with another show on Tuesday, so see you then. Bye-bye.